Welcome back to Explain the Charts, your go-to channel for in-depth market insights. Today, September 12th, 2025, all eyes are on Google, Alphabet Incorporated, following a series of groundbreaking events that have sent its stock soaring to unprecedented levels. Just a few days ago, on September 3rd, Google secured a monumental victory in a federal antitrust case, with Judge Amit P. Mehta ruling that the company would not be forced to divest its highly valuable Chrome browser or Android operating system. This decision significantly de-risked Google, removing a major regulatory overhang that had suppressed its valuation for an extended period. The market's reaction was swift and dramatic. Google shares surged to new all-time highs, reflecting immense relief and renewed confidence in the tech giant's future growth prospects. A key factor cited in the judge's ruling was the rapidly evolving landscape of generative AI, which he believed created a genuine prospect of new products challenging Google's search dominance, thus reducing the need for more severe, forced divestiture remedies. Google itself has been aggressively integrating AI into its search offerings, with features like AI overviews already driving hundreds of millions of queries a month and CEO Sundar Pichai noting over 10% more queries globally. This strategic focus on AI is not only a defensive move against competition, but also a powerful growth driver, attracting more users and reaffirming Google's technological leadership across the tech sector, including among the Magnificent Seven stocks. Furthermore, Apple, a non-party in the case, also benefited financially as the ruling preserved its lucrative multi-billion-dollar agreement to maintain Google as the default search engine on Safari, signaling potential for even deeper AI partnerships between the two giants. Before this ruling, Google was trading at a discount compared to its tech peers. Analysts suggested a re-rating to align with Amazon or Microsoft's valuation multiple could unlock over $1 trillion in market capitalization and push the stock well above $320. While a separate September 10th verdict on Google's online advertising antitrust markets was anticipated, the subsequent daily chart action indicates its impact was either benign or largely priced into the stock by the time of our current analysis, allowing GOOGL's strong bullish momentum to continue largely unhindered. Now, let's turn our attention to the charts and meticulously examine how these fundamental events have translated into GOOGL's price action. On the daily chart, we can vividly observe the massive gap-up that occurred on September 3rd, 2025, where the stock's opening price of $226.21 was substantially higher than the previous day's close of $211.35. This visually striking move, indicative of extreme positive market sentiment, was accompanied by colossal trading volume exceeding 103 million shares, unequivocally underscoring the market's emphatic response to the antitrust news. This powerful gap and go is a textbook example of how a significant fundamental catalyst can rapidly reprice a stock. Prior to this surge, Google had navigated a steady, albeit volatile, uptrend since its significant low of 147.84 on May 7, 2025. That particular May 7th candle, marked by an extraordinary volume spike of over 127 million shares on a sharp decline, now functions as a robust long-term support level, demonstrating strong underlying buying interest at that valuation point and confirming a major accumulation zone. Following the September 3rd ruling, the price has consistently maintained its upward trajectory, systematically breaking through previous resistance levels to establish new all-time highs. The high of 231.31 on September 3rd briefly served as an initial resistance, but was quickly surpassed as the stock continued its confident ascent. On September 9th, Google reached 240.47, and most recently, on September 11th, it recorded a fresh all-time high of 242.25. The sustained elevated trading volume during these post-ruling upswings reinforces the strength and conviction behind the bullish sentiment, suggesting broad participation from both institutional and retail investors. Transitioning to the one-hour chart, we can gain a more granular perspective on the immediate aftermath of the antitrust ruling and the development of the new trading range. Observe the distinct candle from September 2nd, 2000 hours Universal Time Coordinated, closing at 211.32, marking the last hourly price before the news fully hit the market. The subsequent market open on September 3rd at 226.21 reveals the monumental overnight gap, a clear and decisive break from its previous trading channel. The following hourly candles demonstrate strong bullish continuation as buyers stepped in aggressively, establishing a significantly higher trading range with minimal immediate retracement. This swift repricing mechanism confirms that the market fully absorbed the positive news, with a powerful gap-and-go pattern signaling conviction. For short-term traders, this gap becomes a critical technical reference point. The open price of 226.21 on September 3rd now functions as a crucial immediate support level. A sustained breach below this level on the hourly chart would be a significant bearish signal, indicating a substantial shift in short-term sentiment. Let's narrow down our focus to the period around the actual ruling, specifically September 2nd to September 4th, 2025, to fully appreciate the profound, instantaneous impact of this news on GOOGL's hourly price action. Now, zooming further into the most recent trading activity on the 15-minute chart, covering September 9th to 11th, we can analyze the ongoing consolidation and short-term price discovery post-rally. The price has been oscillating within a tighter, more defined range, primarily between $238 and $242. This short-term, range-bound behavior is typical after such an explosive move, reflecting a period of market digestion where early gains are being solidified and short-term traders are evaluating the next directional impulse. Notice the brief, sharp intraday pullback on September 11th, specifically around 1945 Universal Time Coordinated, where the price rapidly dropped from 241.87 to 240.35. However, the stock quickly found renewed buying interest and began to consolidate around the $240 level, demonstrating impressive resilience and an underlying eagerness to maintain higher price levels. The current all-time high of 242.25, established on September 11th, represents a pivotal resistance level that, if decisively broken, would confirm continued robust bullish strength and open the door for higher price targets. Conversely, the $238 to $239 range has emerged as a reliable immediate short-term support, with buyers consistently stepping in during minor intraday dips to prevent further declines. The relatively consistent volume observed during these consolidation phases, especially when compared to the initial volume surge, suggests a healthy market awaiting fresh catalysts before making its next significant move. For intraday traders, a clear breakout above 242.25 on strong volume would be a definitive long signal, while a sustained breakdown below 238 on increasing volume could indicate a potential short-term correction. From a broader perspective, the reasons to remain bullish on Google for the medium to long term are compelling and well supported by both fundamental and technical factors. The federal antitrust victory fundamentally alters the investment thesis, removing a major regulatory cloud and allowing the market to reevaluate Google's true intrinsic value, especially given its dominant position in search, robust advertising business, and rapidly expanding Google Cloud segment. The aggressive integration and demonstrably successful adoption of generative AI across its product ecosystem further solidifies its competitive moat, promising new avenues for unprecedented growth and monetization in the coming years. If GOOGL's valuation multiple indeed undergoes a re-rating to align with its high-growth, high-margin Magnificent Seven tech peers, the potential upside towards and beyond $320 per share is substantial, presenting a significant long-term investment opportunity. However, for short-term traders, while the underlying momentum is undeniably strong, a degree of caution is always warranted after such a rapid and parabolic ascent. The stock could naturally experience healthy pullbacks as early investors and short-term traders engage in profit-taking, making opportune entry and exit points critical for managing risk and maximizing returns. Reasons to adopt a bearish stance in the immediate short term would primarily stem from broader market-wide corrections, particularly within the tech sector, or any unexpected negative developments arising from ongoing regulatory scrutinies, although the most pressing one seems to have been favorably resolved. Looking forward, while the immediate impact of the September 10th advertising antitrust verdict appears to have been minimal, diligent investors should still monitor any future commentary or developments surrounding its remedies, as this could still present a medium-term headwind, albeit a less severe one than the Krohn divestiture. To summarize our in-depth analysis for Google, let's recap the important price levels and our unbiased predictions. The immediate resistance level to closely monitor is the fresh all-time high of 242.25, reached on September 11, 2025. A decisive break and sustained hold above this level, ideally on robust volume, would strongly reinforce the bullish sentiment, potentially targeting the $250 to $255 range as the next psychological and technical resistance point, with a 65% likelihood if overall market conditions remain supportive and no unforeseen adverse news emerges. On the downside, the first critical short-term support to watch is the $238 to $239 range, reflecting the recent consolidation zone, with a 60% chance of holding firm in the event of minor profit-taking or a slight market correction. The next significant support, and a more robust one, is the open price of the post-ruling gap at 226.21, a sustained break below here, which we assign a 30% likelihood in the immediate near term, would indicate a material shift in sentiment and could lead to a retest of the pre-gap resistance now turned strong support at $210 to $212. For long-term investors, the ambitious yet achievable target of $320 or even higher becomes increasingly probable with continued strong AI growth and consistent, positive earnings reports, holding a 55% probability over the next 12 to 18 months if current operational trends persist. Beyond these price levels, all traders should pay close attention to volume analysis. A consistent surge in selling volume on downward moves would be a significant red flag, whereas sustained high volume accompanying upward movements confirms the underlying strength of the rally. Furthermore, continue to actively monitor news surrounding Google's expanding AI initiatives, as successful deployment and monetization will be absolutely crucial for maintaining its current growth trajectory and justifying increasingly higher valuations. That wraps up today's comprehensive deep dive into Google. Don't forget to like this video, share it, and of course, subscribe to Explain the Charts for more unparalleled market analyses and trading insights.